All right, guys, again, welcome to the MMC University for another video that we're gonna continue. That's the third video we're making about the synonyms that we've been discussed earlier. So if you never chance to watch the first two videos, that's the third um that's the third video. So I will highly recommend you go back and you look at those out as well. So that doesn't mean some of the stuff you probably know, but it can also help you in your exam in case you forget them. Some of you probably take the class maybe a long time, then you forget the terminology. So that's why I put this video in place for you guys to be able to follow along. So let's continue with the synonyms. The next word we're gonna learn about is load. Load means expenses. It's a fees or sale charge. So there's policy that have loads. Okay. Also, investment have loads. So meaning that there's a cost. Not really a fee, but it's the cost of doing business. So the load, that's what that refer. It's not not like you know how you somebody say I'm going to pick up a load from Florida to drop it in Kentucky. Not that load. Okay. Yes, they will make it money while they're doing that. Yes, there'll be an expense to take that load from here to there, but the load we're referring to is an expense to an account. Okay, it's a load. It's a fee they charge. Next word is misrepresentation. MIS in front of a word is mean not. Representation is believed to be true. Misrepresentation is false statement. It's a lie. So misrepresentation is a false statement. So, and don't forget, representation is believed to be true. Every statement you made into an insurance application for life, health, home, whatever the insurance is, they consider representation because they are believed to be true based on your knowledge. They are not warranty. Don't you ever believe like when you somebody asks you, do you have high blood pressure? You say no, or they say, are you sick? Are you taking anything? You say, no, man, I'm guarantee you I'm not sick. You can go ahead do my policy. Well, that's you saying it in your mouth. At the end of the day, it's still a representation believed to be true. And a misrepresentation is a statement that is false statement. It's a lie. Okay. I'm sorry. Give me a second. That's why I told you guys you always got to have your water with you. Save your life. More water, more life. Mortality rate. What is that? Is death. Is the death rate. Because the insurance company also keep track of the mortality. Okay. The death rate. So you know that that's what that means. Mortality. Because let's say if you go for people that have high blood pressure, maybe a group of people that have cancer, maybe a group of people that have HIV, a group of people that have stroke, maybe a group that have heart failure. So the insurance company have a pretty good idea what the mortality rate is. Okay. Net premium is the risk minus interest. The risk minus interest. Earlier on the previous video, we talked about the gross premium. Now this is the net premium. Is the risk minus interest. Okay, so the next one we're gonna talk about is non-forfeiture option. Also, when you see the word none in front of the word, this mean not. The word is forfeit. Forfeit mean give up. Non-forfeit mean don't give up. Do not give it up my cash value. So that's what that means. So in non-forfeiture option, okay, when we talk about REC, okay, there's three non-forfeiture option, guys. Remember that REC. Okay, the R is for reduce paid up. The E is for extended term, and the C is for cash surrender. So there's only three non-forfeiture option, and there's six dividend option, and about six cliff settlement option, six settlement option. So know the difference between non-forfeiture. Okay, That's when I'm not gonna give up my cash value. If I decided I want to cancel my policy, I have cash value on it, they can give you three options to take it. The cash value. So use the non-forfeiture option for the cash value, not the dividend, not for the face amount. So the face amount, you use the settlement option. The dividend, use the dividend option. But for the cash value, you use the non-forfeiture option. And don't forget there's three, and extended term is automatic. And also extended term cover you for the longest period, while the reduced paid up cover you for the longest period, excuse me, but the extended term cover you for the highest amount. Okay. Okay, I apologize. Is from the beginning what I said. So extended term cover you for the highest amount because you cover for the same amount of the premium in the whole life. But the reduced paid up, it's cover you for longest period, except you have a policy that reduce as a single premium, which is you're gonna build cash value immediately until age 100. You cover. Okay, so a reduced paid up is a whole life policy, by the way. The next word, options. Option mean choices, preferences, selections. So when you have, again, in chapter 3, you talk about that. There's options. There's three type of options. Non-forfeiture option I just mentioned. And there's dividend option, that's which means crop out. Okay. And there is settlement option, cliff. So you know, there's those. So choices. Option mean choices. Payer. Payer is the person who pays the premium. Usually it's the policy owner. The payer is the one that pays the premium. That's why you have to learn about the payer benefit rider to protect minor child against if the payer is disabled. Policy owner, of course, everybody knows that, is the person who have all the right. If I don't say policy owner, I can say policy holder. They has the right, all the rights, and also they have to pay the premium. They're the one responsible. Excuse me, to pay the premium. Predecease means die before someone else. The reason you have to learn that because sometimes you find the beneficiary die, predecease, mean before. This mean die, so that's mean die before someone. So predecease means sometimes you find the beneficiary die before the insured. That's why you learn that word. Premature, too soon. Okay, die too soon. You go before your time. It's not really before your time, but a time nobody expect. Okay, that's what that means. Let's see. Premium payment mode. Premium payment mode means frequency of premium payment. So the mode means that how often, the frequency. Is it monthly? Is it every 6 months or quarterly, every 3 months? And is it every year? So if you pay 6 months, it's cheaper, right, than quarterly. If you pay quarterly, it's cheaper than monthly. Monthly is the one that the most expensive one. And if you pay for the year, it's less money. You get a discount for paying for the whole year. Primary. Primary means first, main. Primary means first in line. So if you have a beneficiary, they're the primary beneficiary. So they're the first one to get the money. They're the main one to get the money. Remember, I talk about the contingent. Okay. Now, also, we find provision. You have to learn that in chapter 3. Provision, okay, is mean right. So now the chapter can be different, but you're going to find that provision, when they talk about provision, riders, exclusion, things like that. So you're going to find them in the same area. Provision means rights, characteristic, included, come with the policy. They call this standard provision. So standard provision, those are things that come with the policy. If I say car, you know automatically you have to have a steering wheels, four wheels. But it doesn't have to have, you have to have a radio, AM and FM, but the radio doesn't have to be able to play Bluetooth, or it doesn't have to have GPS on it. Those have extra features. That's called riders. So provision is things that the policy come with. It's already included into it. Qualify, meet meets requirements. So when a plan is qualified, it meets certain requirements. That's why you're gonna have to learn qualified plan and non-qualified in chapter the section where you talk about retirement. There's qualified and there's non-qualified. If it's qualified, it meets certain requirements by the IRS, and if it is non-qualified, there's condition that plan doesn't meet. Um, Rates mean premium, what they charge, the amount, the tariff. I'm not talking about the tariff your President Trump had. Okay, I'm not talking about that. Is that tariff the president put on people? So yeah, it's just like you could not say it's a tariff the insurance company put, but really it's a tariff, it's a rate, it's a premium, it's a tariff have a bad connotation, but at the end of the day, it's a premium, it's a charge, it's the amount that you have to pay in order for you to get service. That's all. Ratio is the percentage, proportion, or a fraction. So when you see the word ratio, it's a percentage, it's a proportion, it's a fraction of something. So sometimes they use the ratio of men when you get a good policy compared to women. And sometimes eventually you're gonna learn about I think it's the aspect ratio for annuity, when the person annuitize the contract and they're willing to take money out. Okay. Reciprocal is to give and take, goes back and forth. So the state of Indiana or Pennsylvania, New York allow somebody in Florida to appoint the license in there. Is the same way. Florida will allow the people in the other state also to appoint, to get non-resident license in the state of Florida also. So you let my people do it, I'll let your people do it. Back in, that's it, in exchange. Reinstate. Reinstate means to bring back, to put back in force. Reinstate, when you reinstate something, you bring it back, and is to put back in force, okay? Something that's you're going to redo it. Reinstate. So sometimes you have to reinstate your policy. Renew, able to renew. The word is new, but I have to renew it. That means I have to redo it. Continue or restart. Rescind. Rescind means to cancel, to withdraw. Okay? It means void. Rescind. Rescind means cancel, withdraw, or void. Revocable means can change at any time without anybody permission. So again, that's the other part of, remember about, I talk about revocable beneficiary and irrevocable beneficiary. Revoke means to take away, to withdraw, to repeal, to rescind. Okay? Riders is thing that you added into the policy. Additional policy benefits. Customize the policy. Added policy benefits. Risk means to change. Chance of loss. Exposure. Chance of loss mean risk. Because insurance is the transfer of risk. The best way to avoid risk is to buy insurance, because you take it from here and you transfer it to the insurance company. This is where we stop in the session. So I hope this helped. So again, thank you for watching this video. If you like it, don't forget to comment, share, and let us know how you do on your exam. Okay. And if you need more help, you can go ahead and click on this link. I'll be more than happy to help you. Thank you so much.